Elon is backing out of his agreement to buy Twitter, but now company's chairman is getting ready for a legal fight. Let's explore in this video what is going on with the Twitter stock, the news Elon is abandoning his Twitter deal. Do you think he's having a buyer's remorse, a possible legal battle that can start as a result of it, and at the end, my perspective about Twitter stock, whether you should buy, sell, or just wait and watch. Hi, my name is Sunny and I make content that affect a common man financially. So let's dive into today's topic, Twitter deal off. If you're new to this channel, please subscribe to it alongside smashing that like button as that will help me with the YouTube algorithm, which of course will be highly appreciated. Since November 2013 till date, which is about 10 years, Twitter stock has remained almost flat, whereas stock market had a bull run. On the day of recording, it is traded at almost $36 and some change, but in the last 1 month, its price have become volatile as its buyout deal is still in the limbo. Clearly seen from year-to-date chart, Twitter peaked at almost $52 a share when the deal was announced initially, but since 2013 it has gone down by 11% while markets were on fire, which says a lot about its prospects. Elon is now trying to end his deal of buying Twitter with a plan to take private, which he announced in a very dramatic move where most of the experts were caught off guard. Since then, debt and equity portion of the deal was already put in place, therefore, everyone was considering it as a done deal. News about higher than normal number of automated accounts known as spam bots on Twitter platform linking them to fake accounts might have prompted Elon to take a second look at the deal. Twitter stated about 5% fake accounts on its platform in a regulatory filings, whereas Elon now figured that number even higher. Even after he got sample data from company to check such fake accounts, his letter mentioned misleading representation in the deal by Twitter about fake accounts, which are reasons for him backing out. On the other hand, some analysts are even stating it as a buyer's remorse. As soon as the news about Elon's letter became public, company's chairman responded, and I quote, "The Twitter board is committed to closing the transaction on price and terms agreed upon with Mr. Musk and plans to pursue legal action to enforce the merger agreement." Close quote. It is widely known that Elon waived his right to have financial due diligence done, which included $1 billion breakup fee when he signed a contract to buy Twitter for about $44 billion in all-cash deal. Hypothetically, if the company wins the case in court, it can force Elon to pay breakup fee of $1 billion or even force him to buy at original price. Proving misleading information about bots legally could have a very higher legal threshold. If successful, he might get away with it, or some experts are of the view he could be forced to buy Twitter at new negotiated price. Looking at Twitter's 10-year price chart, it has been very volatile but remained flat while stock market had a bull run, which says a lot about the company. It definitely lagged other social media giants as far as revenue or profitability is concerned. Some experts think their inability to completely monetize their content like Facebook could be the main reason, hence the difference in their valuations. No doubt, all social media platforms have some fake accounts, but reliability of data put out by Twitter, which is being questioned by Elon, at least brings doubt in investors' mind. In my limited wisdom, Twitter is nowhere close to $44 billion in valuation right now, considering NASDAQ composite is down by 22% in the last 6 months, whereas big company like Amazon is down close to 28% in the same time period. I believe Twitter is in a very tough spot, no doubts about it. Reports even suggest company employees on the edge due to recent executive departures. Last but not the least, uncertainty about its future and ownership. Hence, ad revenues might go somewhere else. With increasing interest rates, as economists are talking about signs of possible short-term recession, economy will slow down, which will affect ad spend by the companies. Therefore, at the end, monetization of their content with ads on their platform will be affected given the changing economic scenario. At the end, I would say rather than buying a Twitter now, wait and watch approach could be the ideal one. But that is me, I might be wrong. Do your own due diligence before investing based on your risk tolerance. As a disclaimer, I'm not a financial advisor. Please consult one before investing based on your personal financial situation. If you like the content that I make, please help me and my channel by liking, sharing, and subscribing to it. Thanks for watching and see you in the next one.